Good morning. I'm Peter Milios from the Finance News Network. US stocks fell for a second session on Tuesday as steep declines in major tech names such as Apple dragged the broader market further from the record highs recently reached. The Nasdaq Composite pulled back by 1.65% as technology stocks felt the brunt of the market's drop. The Dow Jones Industrial Average lost 404.64 points, or 0.14%, and the S&P 500 dipped 1.02%. Apple slipped almost 3% on the back of a report from Counterpoint Research that found iPhone sales plunged in China in the first 6 weeks of 2024. Several other mega-cap technology stocks, including Netflix and Microsoft, shed close to 3.3%, while Tesla dropped nearly 4%. Outside mega-cap tech, GitLab tumbled 21% after the software company posted a weak forecast for the full year. Intel and Salesforce were the worst performers in the Dow, with each retreating by more than 5%. Beyond technology, Target jumped more than 12% after holiday quarter earnings came in stronger than Wall Street forecasted. AeroVironment rallied almost 28% following a better than anticipated quarterly report and outlook from the defense company. Tuesday's moves come as investors digest the market's recent rally to all-time highs, which has been powered by optimism around artificial intelligence. Despite the intraday losses, the three major averages are solidly higher year to date. Turning to US sectors now, all sectors closed lower except for energy, consumer staples, and financials. Tech was unsurprisingly the worst performer following the poor results from the big tech names. Bitcoin was the latest asset to hit a record, notching an all-time high on Tuesday. However, the digital currency quickly moved into the red after breaking the high for the first time in 2 years. In commodity-related news, the price of gold has reached a record high of $2,141 per troy ounce, fueled by increasing anticipation of US interest rate reductions, demand from investors seeking safe haven assets, and significant purchases by central banks and Chinese investors. This surge surpasses the previous record of $2,135 set in December, according to the LSEG data, although the price slightly receded to $2,131 per ounce later in the trading day. Canada and Australia have formally agreed to collaborate on advancing shared priorities concerning the extraction, processing and refining of critical minerals, as stated in a joint ministerial statement. Additionally, both countries will actively advocate for transparency in supply chains and the implementation of robust ESG standards within critical minerals markets, recognizing the anticipated surge in demand amid the global shift towards clean energy. Looking ahead to the Australian landscape, the SPI futures are pointing to a 0.1% fall. Thank you for listening.